Europe, though I would still say that the US market is far more resilient and robust than the European market. We have increased our share into UK by a few percentage points and are expanding our relationship there, but it's not, it's not that significant. US still continues to be dominant with over 75% of our exports into that region, while we continue to export to about 50 countries.
Right, sir. Thank you very much and all the very best to you.
Thank you.
Thank you. The next question is from the line of Bhavya Gandhi from Dalal & Broacha Stock Broking. Please go ahead.
Yeah, hi, thanks for the opportunity. Hope I'm audible.
Yes, you are.
Yeah. So, sir, just wanted to understand on the macro level, globally, polyester is a major market and India largely being a dominant in cotton market. So how do we intend to grow in the polyester? Because I think we don't have a back-end ecosystem for polyester. So what is our thought process on this?
See, polyester is, about 50% of global fiber, whereas cotton is, say, about, 25-30%. So polyester is almost double that of cotton, and India's strength is in cotton thanks to the raw material being available in country. People like us who also export a lot of outerwear and sportswear tend to export a lot of garments which has got a polyester content in it. And the fact that we have operations in Africa where we enjoy a duty-free access to US and duties in synthetics being extraordinarily high in the US, we tend to have a little dominant, product mix in favor of polyester. So most of the polyester or synthetic fabric that we buy as raw material comes from the Far East, from various sources, various countries. And since we have some of those technical capabilities and cost-efficient production, we are seeing reasonable amount of traction in those spaces. Both athleisure is growing. Some segments in outerwear also we are seeing now some growth after a lull for some time, primarily because there was an excess inventory in the system for the last 2 years. So we are now seeing that traction coming back too. So we are seeing traction in the polyester segment, but fabric dependency is still on import.
Right, got it. And unit economics wise, we are cost competitive, right, when it comes to polyester as a product?
Because we focus on highly technical products, yes, we are cost competitive.
Okay, got it. And just wanted to understand what would be the total capacity in terms of pieces post all this MP, Karnataka, Ranchi expansion?
Total capacity in pieces?
Pieces, million pieces.
We really do not measure our capacity in pieces because it's, very product type dependent. So Ranchi, we are, expanding for knits. In Madhya Pradesh and Karnataka, we are expanding for wovens. In wovens, we do garments which which take anywhere from 18 minutes to 45-50 minutes. And in the south, we make even garments which take 200 minutes to make. So really denominating capacity in pieces is hard. But let me give you, revenue-wise, because at the end of the day, that's probably what you're trying to look for.
Right.
The incremental capacity in MP should net in about 175 crores when it is fully ramped up. I'm talking of the incremental new capacity. The one in Karnataka would yield about 125-130 crores. And the one in Ranchi would yield about 55-60 crores. So overall, I would say, it's about 300 odd crores.
Got it. And have we got any firm commitment for the incremental capacity that we are putting in? I mean, any visibility from the customer side?
So at the moment, all our existing capacities are fully utilized. And there is a fair amount of demand traction that we are seeing. Some of these capacities will come up towards the start of Q3. So we are seeing a fair amount of demand traction building up in anticipation. So we don't foresee a big challenge. In fact, we have enough of inquiries and we are turning down demand because we don't have enough capacity to serve. So I'm not so worried about the ability to fill up these incremental capacities.
Got it. And on the console level, can you guide on the EBITDA margins?
I'm sorry?
On the console level, can you guide on the EBITDA margins post the capacity expansion and the Atraco and Matrix merger, on a full-scale basis?
Keep in mind that whenever capacity comes for a year and a half, the incremental capacities have a tendency to depress the earnings. In fact, our Madhya Pradesh unit has tendency of reducing our EBITDA margin because it was on a serious ramp up. We've now reached manpower count of almost 2,200 there. And while we were ramping them up, training them, etc., we had far more people in training than we had people in production. So causing an overall cost being in excess of revenue. So it takes a while before that normalizes. So keeping all of this in mind, we are still aiming for a % improvement in EBITDA margin going forward at a console level, in the year ahead, year and a half ahead.
Got it. And just wanted to understand what would be the total depreciation for next 2 years, if you can provide some number on that.
For the current year, it is about 125 crores. It's got two components. One is the India's depreciation and regular depreciation. Going forward for FY26 and 27, the depreciation will increase by almost around 15 to 17 crores and an average you can take yearly.
Got it. And if I can squeeze in one more question, just wanted to understand on the Japanese FTA, are we trying to tap into any of the Japanese customers? I believe the stickiness is much higher on the Japanese side. If you can throw some light on that as well.
So we do have inquiry from that region, but at the moment, since our capacities are full, we are unable to, open up any capacity for a new customer. So that's one of the reasons why we have not been able to bring in any customer from other regions for now.
Got it. Are we trying Australia or any other region for that matter? Because I believe again we've signed an FTA with Australia as well.
Not really, because the volumes there aren't that large. So there are a few customers where the pricing may be very sharp. So we are not that aggressively looking at that region.
Got it. Fair enough. That's it from my end. Thank you so much. Yeah.
Thank you. The next question is from the line of Sundar from Avendus Spark. Please go ahead.
Hello, sir. Thank you. Thank you for the opportunity. The first question is on the margins of the acquired entities. So there's been a remarkable turnaround from what we had last quarter to this quarter. So can we assume that all the problems that we had in Atraco was behind us? And what is the impact of that Kenyan shilling precision to dollar had in terms of margins?
So I wouldn't say everything is behind us. It's a work in progress. And I think this work in progress will continue into Q4 as well, and maybe even early Q1. The way we are combating that Kenyan shilling, Kenyan shilling appreciation is by focusing on operational improvement. So there's a considerable movement in operational efficiencies in our African units, thanks to a good work done by the team there. And secondly, there is also been some amount of price increases that we managed to secure on the basis of an appreciating shilling. So this has helped us. I would say that some of these newer orders which are at better pricing actually kick in from Q1. So in Q4 there is some blended impact. So the real benefits will start flowing in the next financial year. In the meanwhile, we tend to we are trying to explore all avenues to improve the performance of that unit.
I'm coming back to this because you had earlier guided that 10% is the sort of margins that we should look for Atraco. I believe given the blended number that you've disclosed, you're far above that particular number. So do you want to revise the guidance as to what we can look in terms of margins for the acquired entities?
So I would say Atraco, if I get about 10% EBITDA margin in the next year, I will be happy. We're working towards that for sure, and we will, hopefully even achieve it. For the other unit of Matrix, I think they will be at par or a notch above Gokaldas Exports, primarily because we're not adding too much of new capacities there. So there is no drag on the P&L on account of new capacities in that entity.
So if you can just help with the current quarter split between Atraco and Matrix and ballpark number in terms of margins.
So I think Matrix is at about 14% and Atraco is proportionately I think 7% or thereabouts.
Right. So Atraco 10% movements would be the trigger by Q1 is what we can expect.
Well, we're trying, and I don't know whether it will be by Q1 or by Q2, but the effort is on. Again, as I said, incremental orders will slowly nudge up the pricing and hence the margins. It takes time to build up, overnight we may not be able to move that much. Maybe if not Q1, by Q2 we are trying to do that.
But my assumption is that by now all the order booking is being done by you only, so there's no erstwhile orders to be executed as of today.
That is by and large correct. Though in Africa we tend to book little longer term orders and there are repeat orders, etc. So sometimes you may not be able to secure all the price increases in one go. So, but you're right. All the incremental orders are being secured by us now.
Perfect, sir. So just coming back to the standalone business here, you indicated that there is some cost build-up on account of Madhya Pradesh. So are we referring this to phase 2 build-up that we're trying to do for that 175 crores incremental revenues next year? Or is it referring to the phase 1 cost that we incurred?
Phase 1 cost, because what happened was we suddenly shot up to full capacity utilization in phase 1 and bulk of that capacity ramp-up happened in Q3. So we went, to full complement of workforce. Now the entire unit is working chock-a-block, from a capacity utilization standpoint. So that massive ramp-up which we did in Q3 also cost faster cost increase than revenue realization.
But on a standalone basis, if we were to just look at MP on a standalone basis, what would be the standalone margins of that unit, sir?
Standalone margin which we will achieve in the future or standalone margin in Q3?
And in the future, what is the potential of that MP unit given that that is also a PLI approved unit?
My assessment is at least 2.5 to 3% over the Gokaldas standalone achievement.
Yep, and this should be after phase 2 also stabilizes.
That's correct, because while phase 1 will stabilize starting Q1 onward, I think phase 2 will start having that impact. That phase 2 we are expecting the construction to be over in May. So somewhere in June, July we will start the manpower ramp up.
So the incremental training you would have already started for phase 2.
We will be starting, not now, we'll be starting soon. I mean, we'll be starting closer to end of Q1.
Right, so perfect. And the Ranchi unit that you mentioned will be under Matrix or will be under Gokaldas standalone?
So now the integration of Matrix is strongly underway, operational integration I'm saying. So there is hardly any difference between Matrix and Gokaldas. Yeah, as far as the legal entity is concerned, it will be under the Matrix subsidiary. The expansion in Ranchi.
Right, so fair enough. And one last question here is that I presume that you gave out the margin or the potential margins of MP without the inclusion of PLI or the DBC that we were entitled to. Now, what is the status update on both of that, sir?
MP PLI. So see, the PLI is dependent on a product type. And the product type that we are currently manufacturing in MP does not qualify for PLI. PLI is restricted only to 40 specific HS codes. And those HS codes, the order flow into India is not very high. So we are really, at the end of the day, PLI is something where, if you're able to secure it, great. But, our focus is to make sure that the business runs with or without PLI, right?
And on the DBT part, sir?
DBT?
The direct benefit transfer that you had a promise from the state government in Madhya Pradesh. That's
continuing. So that is available in MP.
Okay, that numbers have started flowing is what I'm trying to understand.
So in terms of accounting we are taking, and we are at we were told by the LP government that it will start going from the forthcoming financial year, and we should start seeing that. So we are on track for it.
All right, so perfect. But can there be a lever to margin beyond the 250 basis points because of DBT coming through, or is it already accounted for?
So I think there is a lever to margin improving over the 250 basis points. Yes, there is.
Perfect. And one last one, if I may squeeze, as to the current status on BRFL, given the additional investment or the stake that you're beginning to procure. What is the status now? Is that, are we still going to go with that 250 crore investment, or where are we in that particular journey, sir?
So till this quarter, that is, quarter ending December, we have invested 110 crores in BTPL, and subsequently we have invested another 65 crores. So it amounts to about 175 crores of investments till date. The unit is currently, from nearly no orders, it has reached to about 40 to 45% capacity utilization. Incrementally, we will not be able to pull up the capacity utilization until all the capexes which are underway are seen through to its fruition. So there is a lot of work going on which will continue through till April in terms of debottlenecking capacity, repairs of machines, upgrade of the machines, etc., etc. So in that sense, we have taken up the capacity utilization pretty quickly and handsomely. So obviously this meant that the losses have started coming down. There's been significant improvement in production quality also. So for example, reprocess rates have come down. The quality of production has started improving. We are starting to nominate this mill with various brands. So a lot of activities are going on as we speak. And it's been only since July that we took over. And realistically, we took, when we say took over, we started engaging with it. So realistically, we started, the activity started only in August. So the progress that we have made in the last 6 months has been pretty significant. And that gives us, the confidence and the encouragement to seriously consider, merging this asset with us going forward, at the opportune time.
So does the timeline change from what we had initially indicated in terms of when this entity would be consolidated within this timeline?
No, I think at the moment the thought process is to initiate this sometime in the month of June 2025 and go through an NCLT process for merger. And hopefully that will take another 9 months or 12 months, depending on how long that process takes.
Sorry to come back into this, but what would be the total quantum of money that would be required from here to June 2025 for the acquisition of this entire entity?
So
beyond the 175 crores.
Apart from the 175 crores, I think it will be about, we had earlier on indicated about 588 crores to acquire 100% of the asset. So that's, it will be that amount adjusted for certain working capital. And, there are some financial terms and conditions in the agreement. So that's the amount that will be required, as and when this event gets triggered.
Perfect, sir. Sure, sir. Thank you and all the best, sir.
You're welcome.
Thank you. The next question is from the line of Prerna Junjunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. So just taking forward BRFL discussion only, one last question on that front. At 175 crores, our stake is 13%. Is my understanding correct?
No. 175 crores is invested only through OCD. So we this is a investment into BTPL for its capex plans, for performance improvement and so on and so forth, working capital, some amount of loss funding, etc. So it's only that. The 30% stake is in addition, where we intend to buy some shareholders out. in a process to kickstart the consolidation of that entity with us.
Okay, so 175 crore doesn't include a 13% price cash consideration that you have mentioned in the press release.
That is correct.
Okay, understood. So second question on Atraco. Is any expansion in Atraco as well?
So as we speak, the 500 machine expansion has been initiated, and we have spent about 35 crores in Indian rupees for that.
And what will be the revenue potential for the same?
The revenue potential will be about, in my opinion, about 125-130 crores.
Okay. And I missed the Ranchi machine number. Can you just help me with that as well?
So Ranchi, it's a lease facility. We have taken a 200 machine facility, but it will work in two shifts. So equivalent, it is 400 machines.
Understood. So, sir, if I your total revenue would be around 4,000 crore approx, annualizing the 9 months numbers, and your total revenue potential that is getting added 300 plus 100 for Atraco, 130, so around 500 crores. So, in the next 2 years, should we assume this 500 crore additional revenue, or how it should flow, and how will growth pan out for the company to utilize the benefit from shift in supply chain? Shouldn't we be growing a little higher growth rate? I mean, if I'm missing anything somewhere, you can clarify. Thank you.
Sure. So these are units and expansions which are underway as we speak. This doesn't stop us from adding more capacity as we go along. So at any point in time, we are planning a lot of incremental capacities as well. This is point number one. So we, in the next 2 years, we'll be adding more factories. And we're not going to stop at the factories that are work in progress as we speak. Secondly, the existing units also do get debottlenecked, and we are continuously investing in automation and productivity improvement. So a 3% improvement in existing units per annum itself on let's say a 4,000 crore revenue yields additional how much? About 120 crores, right?
Yeah.
So those kind of growth will also happen, and as I said, we will also look at newer facilities for growth.
Okay, so should 10% plus growth rate, 10 to 15 should be a decent assumption for assuming over a longer term, like 2 to 3 years time frame, medium term period?
I think it's a very decent assumption. I would say, the top end of that range will be a more reasonable, decent assumption.
Oh, that's great. And consolidated margins should be around 12% on expanded capacities?
That is correct, though we are trying to improve our margins also as we speak. As I said, some of these growth in newer regions do tend to take longer before it stabilizes, as we don't get access to trained manpower, so we have to work harder to train them and bring them up to speed in terms of productivity and quality, etc. But now that we've achieved it, incremental factories in some of these newer regions like Madhya Pradesh and all will be, will reach productivity and profitability sooner. So yeah, despite all of that, in the first year there will be a negative impact of new capacities, but we are looking to offset that and improve the EBITDA margin in the coming financial year.
Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. We have the next question from the line of Heath Vora from Guardian Capital Partners. Please go ahead.
Good morning and congratulations on the good set of numbers. I just had one question, and that's per se to the tariffs. If we are going to see an increase in tariffs, would Atraco be benefiting given it goes tax-free to the US?
So we don't know what is happening with tariff, right? There is so much of news coming from United States that it's hard to keep up. One doesn't know what exactly are the tariff plans. But the feeling one gets is that Africa may be spared tariffs, and currently it enjoys a Goa benefit of zero tariffs. So unless for some strange reasons it's pulled out, which I don't see any reason, and there is no no competitive situation between US and African countries, nor do they enjoy trade surplus. So we don't believe that will change. And if there is a tariff increase from the regular exporting nations, then the tariff delta will widen, which will only make Africa more attractive. And that's one of the reasons why, customers who are hitherto also not very keen on Africa. So there are some customers who are also talking about it, saying that, maybe we should explore. At least we are having some conversations around it. So I feel that it's going to be beneficial for us, from an African standpoint in the longer run, if tariff goes up in other regions.
Got it. That was it. Thank you so much.
Welcome.
Thank you. The next question is from the line of Mithun Awasth from Kiva Advisors. Please go ahead.
Hi, sir. I think you've answered a lot of the questions I had. You mentioned about 15% kind of overall top line growth. I just wanted to understand, you embarked on M&A as a strategy to grow. In the next couple of years, will you continue on that path? Are you seeing more opportunities to consolidate? That was the first question. And the second question was more on the BRFL acquisition. How would that kind of change the contours for you in terms of size? Because utilization is still low. What kind of revenues and profitability could that add to the company?
So, would we look at acquisitions? Probably in the short term, no. In the long term, yes. We are open to growth in any form. And again, we will not acquire a company just to bulk up or add revenue. Our intention is to acquire to get access to a low-cost geography, access to a new customer, or access to a new product type. And it has to make strategic sense in addition to simply a revenue gather. So that's the strategy. But in the short term, we are not looking at an acquisition. We want to consolidate what we have. Remember, we have only taken up some of these acquisitions, 9 months ago, and there is tons of work required to be done to bring them to where we would like to see them. So, next year also will be consumed in bringing those units up to speed with Gokaldas' operation. So, we won't be indulging in any acquisitions in the meanwhile. That's point number one. As your next question was on BTPL or the fabric unit. See, the fabric unit is strategic. It helps us secure raw materials. It helps us turn things around much faster for our customers from a lead time standpoint, and also improves our negotiating position with brands, because the number of fabric mills are far fewer than the number of garment companies. So at the end of the day, if you do control fabric, you do have a better handle over specific orders and product types. So with all of that in mind, we went acquiring this asset. This asset is also has a great reputation from a technical capability standpoint, and we need to now bring back that capability to the customer, which is what the work in progress is. So if the impact of BTPL, if I look at it on a standalone basis, its peak revenue could be about 1,500 plus crores. But then again, a lot of it could be bought internally. So once it is merged, some of those revenues will get knocked off in consolidation. But then obviously it may have an EBITDA improvement benefit.
Right, sir. What kind of impact could it have on the EBITDA from FY27?
So if I look at it as a standalone basis, the EBITDA of this unit should be about 12, 13, 14%, going forward. So if it is more or less in line with the garment EBITDA, then again, if the revenue gets knocked off, then obviously there will be some sort of an EBITDA benefit which you can do your math.
Sure. Thank you.
But then, I don't see this consolidating before FY26. So effectively, if at all it happens in FY27 onwards.
Correct. FY27 is what I was asking you.
Thank you. Participants who wish to ask questions may please press star and 1. We have the next question from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, can you hear me?
Sir, you're audible.
Sir, can you again explain the cost build-up in the MP unit which led to lower margins, that particular part of it?
The question was, you're asking the cost build-up in MP unit?
Yeah. You said there was a cost build-up in the MP unit which led to lower margins. Can you explain that particular part?
So the point here is that, in the third quarter, we started adding people. We almost added about 1,200 people in the third quarter in MP. So now the manpower count has reached about 2,200 people. So most of them were under training during that period. And in the initial phase of production also, since they are trainees who are in the production line, their productivity will be low. So we incur the full complement of labor cost through training as well as early production, and then the corresponding revenue doesn't materialize because it comes with a phase lag. So our incremental cost was about 3 to 4 crores on account of all of this, and it is not manifested in proportionate revenue. So that was the point I was referring to.
Okay. Thank you, sir.
Thank you. The next question is from the line of Monish Godke from HDFC Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. So what would be the share of outerwear on an annualized basis in the revenue of each entity, that is Gokaldas, Matrix and Atraco?
So outerwear on a 9-month basis for Gokaldas was about 30%.
Annualized basis would be how much?
Yeah, I mean, it will be around similar percentage, 35% maybe.
Okay.
Matrix and Atraco is very less. It will be like low single digit.
Okay. So this margin expansion which we have got in acquired entities of 11.3%, since Q3 and Q4 are generally summer heavy, do you expect this to continue in Q1, Q2 as well, or there will be some reduction?
There could be some reduction, particularly Matrix is spring summer heavy, so where there could be some reduction in Q1 and Q2. But the aim is to offset that somehow by further improvement in Atraco as well. So there's a lot of countervailing forces as well, so we'll try our best.
Okay. And sir, one more question. So in this budget, there was an increase in duty in knits fabric imports. Does it impact us in any way?
No. Most of the knit fabric that we use, we will we buy domestically, and even let us say we buy fabric for export manufacturing, we buy it under advance license, so we don't pay duty on those. So we will secure the raw material at nil duty.
Okay. Thank you, sir.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. We have the next question from the line of Manish Sehgal, an individual investor. Please go ahead.
Hi, sir. Thanks for taking my question. Just wanted to understand this purely from a production perspective. Q4 production, as you said, is fully utilized. What will be the production in terms of revenue? And also, if you could give an update on the knitted unit that we had commercialized last year, that'll be good, sir.
So we don't give specific numbers of revenue going forward. So suffice to say that even Q3 was working at full capacity utilization. Of course, what happens in Q3 is that towards the end of December, a lot of shipments get bunched up. They don't move out because of port congestion and other things. So typically some of those revenues tend to spill over. But currently, if you look at revenue standpoint, we are reaching that full capacity utilization across our units. and incremental units will come and debottleneck that and provide additional growth opportunities. As far as the knit fabric unit is concerned, the knit fabric unit is producing. We are getting nominations from quite a few customers. In fact, at the moment we have 2 or 3 customers who have approved that unit for fabric sourcing. We will be ramping it up through Q4 and Q1, and I feel that it will also reach a full capacity utilization somewhere in Q2.
And what could be the output there, sir, in terms of revenue? Of course, it will be sourced internally, the fabric, but should add to EBITDA there, right?
So exactly. So output will be about 400 tons a month. That is the expected output, and its revenue will be annually about 150 to 200 crores.
Okay. Sir, you had a stated vision of moving towards $1 billion revenue, say, down the line in 3-4 years. What do you feel now, standing where we are on that vision?
So, see, I think that vision, at the end of the day, that vision is quite attainable. The demand side, I don't see that as a bottleneck at all. There is enough opportunity coming India's way, and there are many customers who are increasingly trying to source more from India. So as long as we can find lower cost manufacturing locations within India and are able to produce it at high productivity, achieving that target should not be a problem.
Any stated objective you have on this front? How much time you want to achieve this?
Students, I would say, but it will take a few years for sure.
Okay. And lastly, sir, do you expect Q4 margins now, given you have the bookings, to be better than Q3, given the full ramp-up in MP has happened? And it's a seasonally good period for all the acquired entities as such?
Yeah, so see, if Q4 is seasonally good, directionally it should happen, and again, let's not speculate on those margin numbers. But yeah, directionally we will be going in that, on that trajectory.
Lastly, sir, how will INR depreciation help going forward?
So INR depreciation will not benefit in the immediate near future for us, primarily because we hedge most of our near-term receivables. So today, for all the way up to Q1 and even partially to Q2, we have hedged all our receivables at old rates. So, but INR depreciation in the longer run always helps us because it allows us some flexibility to absorb costs and offset some of the inflationary trends on the cost side of the company. So it augurs well for an exporter, and it will augur well for us.
Thank you, sir.
Sure.
Thank you. The next question is from the line of Bijal Jitendra Shah from RTL Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on the set of numbers. I have 2 questions. One, we read a lot of news items saying that buyers in US were increasing their purchases from across the world on account of expected tariffs. So I just want to understand that you have seen strong growth in Gokaldas. Is there an element of preponement of purchase and which should reverse in the due course of time? That's question number 1. And question number 2 is on the Bombay Rayon. Once it is fully operational and once you have done all the capex, will it reduce your dependence on imports from Southeast Asia?
Okay. So, regarding the first question, is your question on, how is tariff going to play? I could not fully understand your question, the first question. I did understand your second one, and I can answer that subsequently. Can you, repeat the first question?
See, there was expectation that tariffs will come. So to avoid tariffs, there was a lot of news items saying that for buyers in US is actually preponing all the imports. So building the inventory, so at least for a few months, that they are kind of protected from the tariff which probably Trump could announce. So during the December quarter, and probably 4Q also, are you seeing that some of your buyers have actually preponed the purchases, or the growth which you have seen is normal?
See, the buying is very seasonal. So if I start advancing too much of my buy, these are all short-term play which you can do for 15 days, 20 days. But every 3 months we are buying products. The American customers, the European customers buy products which are very specific to a particular season. So they will not go, and production also happens for that season. So they are not going to go buy excess and then hold the inventory over 1 year and all of that. So I'm not seeing much of that happen out of here. And also the worry on tariff is more on the Far East. So there may have been some degree of expediting of deliveries from China, maybe even Vietnam and all of that. But then as far as the India-denominated sourcing is concerned, we have not seen so much of that.
Got it.
And as far as your second question on BTPL becoming an import substitute for us, answer is no. Most of BTPL will still work on domestic fiber, and it will become a substitute for domestic mills, but not really, and of course growth, but not really a substitute for imported fabric. So synthetics, etc., will still continue to be dependent on imports.
Got it. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Avinash Nahata from Parami Financial Services. Please go ahead.
Thank you. Am I audible?
Yes, you are.
Okay. So the first question pertains to